Welcome to another trade recap video. Today is Thursday 25th of June and we're gonna go over the position that I took this morning on NQ during London Open, which cost me $290 on my account. A small but very avoidable loss. Let me explain. First off, let me show you the proof of equity. So I lost $290 on the day, same account that I was trading on the last trade recap videos. This was the one trade that I ended up taking on the day. It was a mistake. I should not have been in this trade. And in order for you guys to understand why, you have to understand how my entry pattern is formed. So let me explain. Whenever we have a fair value gap, which is formed between three candles, one candle, second candle, third candle, there is a fair value gap that's being created, not always, but sometimes, meaning the wicks don't close, like for example here, 1, 2, 3, no gaps. Here, 1, 2, 3, there is a gap. 1, 2, 3, there is a gap. 1, 2, 3, a gap. Whenever price steps into a gap, fair value gap, either with the wick or with a body closure, but not past 50%, which is why this middle line is here. Then following after that, a candle breaks the structure of the previous candle. That is my entry pattern. Of course, this is one part of my system coming with a delivery, a good draw on liquidity, aka a target, and of course conditions on the higher time frame and the lower time frame. However, when we tap into a fair value gap and we fail to deliver, so we mitigate the swing point, but we don't break structure, that is called a failed delivery in my system. Price tried to deliver from the fair value gap, but no break of structure has formed, and we re-deliver into the gap. A re-delivery is not always a problem. For example, here, when there is no failed delivery in this gap, we already delivered here, but we didn't fail to go from there. We broke structure and we went higher, showing that this gap has force. So when this candle, for example, re-delivers in this gap, that is no problem. Here it is because we failed to deliver. We failed to break the structure of this three candlestick formation after tapping into it, which is important to understand why this trade right here, this entry candle was valid, which I will explain later, and this one is not. Coming into the market this morning on the 4 hour, I immediately was prone to buying more than towards selling. Why? Price ended up taking this 4 hour gap during yesterday's New York session, after which it spiked up, mitigated this big 4 hour, created a 4 hour and a big 1 hour in that process, tapped into that as well, and starting to deliver higher towards this Asia high and a 15-minute gap, which were the first two draws that I had marked out. You can see that on the 1 hour as well, after hitting that 4 hour, creating a big 1 hour, delivering from it and continuing higher. And we have Asia high right here, a 15-minute right here, and another 1 hour higher as well. So most recently delivering bullish. I always look at the most recent delivery. So coming in the session at 2:30, we immediately had a setup. There was this 15-minute fair value gap continuation, and looking back on it, this was such a textbook setup. I do not understand why I didn't take it. I saw it. I had the chance to get in at a pullback, so even improving my risk to reward as the setup formed already before I came on the charts. And I decided to follow my feelings and not to take it. So this was my first mistake on the day, setting me up to FOMOing into a B setup that I should not have taken. Of course, setting myself up to do so. Right. So, as I said before, we had this 4 hour delivery, we had this 1 hour delivery, and we have this 15-minute delivery. Price is moving with intent towards Asia high, this black line right here, and the 15-minute gap above. Easy 40 to 56 points, 1.4 risk to reward, and I could get in at a pullback. When I came on the charts at 230, I could have gotten in right here, improving my risk to reward even more to about a 1.9. I decided not to get in. Looking back on it, there was no reason for me not to get in. It was textbook, other than the fact that I don't have so much experience with taking 15-minute UFEGs or taking 15-minute fair value gap continuations. This was actually a must take. Not taking this led to me experiencing FOMO, and when price started surging up after 3 a.m., taking out Asia high, I was keen to take a trade towards the 15-minute UFEG above. Whenever we take a draw, what I need is a pullback into a higher time frame gap. For example, the 5-minute that was about to be created. Right there, we created a 5-minute. So after we took out Asia high, we created a 5-minute gap. We tapped into that 5-minute gap. Right there, delivering us higher and me entering this trade. Everything about this trade is textbook, other than the fact that we failed to deliver from this gap previously. As I explained prior, this is just a non-negotiable, very mechanical rule in my system. I cannot take it, and I FOMO'd into it. Blinded by the 5-minute delivery that was clean, blinded by the 15-minute UFEG that is a very clean draw, but I should never be in this trade. And that is my biggest working point. Staying patient when I missed setups that play out, when I talk myself out of good setups and they play out, still staying patient to take the next good setup and not FOMOing into a B setup. And in the first place, not talking myself out of so much quality setups. My trade frequency is a bit too low. It can be higher. Every Sunday I do a weekly review and I find that I missed a lot of opportunities that were good, that were valid, but I talked myself out of it. For example, the 15-minute fair value gap continuation prior was a textbook setup. Nothing wrong with it. It just didn't feel right. So I followed my feelings and not my system. And then here, I'm not following my system and I'm following my feelings again, but in the opposite direction. So I got stopped out. Price stepped into the second of this 5-minute gaps, delivering us from this 1-minute gap right here. And we had another setup which is valid, and you can already guess it, this one played out. If the risk to reward to the draw is negative, I wait for a pullback until I can get a 1-to-1, which would have been perfectly aligning with price stepping into this newly created gap around here, putting my stops to 20 right there and 20 right beneath the draw, or hold until the draw. That would have been a much better trade, a newer 5-minute delivery, a lower 5-minute delivery, which is important, and of course a redelivery, but not from a previously failed gap. Direction was right, bias was correct, but I positioned myself wrong for price to take out this draw. Lesson learned, didn't tilt, which is good. I'm here to learn and grow from my mistakes and get better on a daily basis, keeping the losses small and keeping the wins bigger and more consistent. That's the goal. If you have any questions about something I talked about today, let me know in the comment section down below. I'll be very happy to help you. Other than that, I wish you the best day of your life so far. What that means is tomorrow is gonna be even better. Goodbye for now.